Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on GAIL. Our analyst maintains buy on GAIL with an unchanged price target of Rs 128. GAIL is a tactical play on expectation of strong earning recovery in Q1 of FY24, driven by stabilizing global LNG supply and price, better gas pipeline transmission tariff, turnaround of its petrochemical business, and higher margin for LPG LHC segment supported by APM gas price cap of $6.5 per MMBTU versus $8.6 per MMBTU earlier. We estimate 10 times quarter-on-quarter rise in EBITDA. Valuation of 5.9 times its FY25 estimated EV by EBITDA is reasonable given a steep discount of 30% compared to the historical average of 8.4 times and expectation of a strong PAT CAGR of 39% over FY23 to FY25 estimate on low base of FY23. PAT declined by 49% year-on-year. Likely higher ROE of 16.3% in FY25 estimates versus only 9.5% in FY23 and a healthy dividend yield of 5 to 6%. Next on radar is HITECH Pipes. Our analyst has a positive view on HITECH Pipes considering its strong net earnings growth outlook over FY23 to FY25 earnings. The company targets a strong 30% CAGR in volume growth over FY23 to FY25 earnings. The company has an EBITDA per ton target of 3,500 to 4,000 for FY24, while it strives to achieve Rs 5,000 mark over the long term. Its installed capacity is expected to increase to 7.5 lakh ton from Q3 of FY24. The target is to reach 1 million ton capacity by mid FY26. The company is expected to report 21% CAGR in consolidated revenues over FY23 to FY25 earnings, while operating profit margin expansion and reduction in leverage would lead to over 45% CAGR in net earnings over the same period. Last week, our Federal Bank. Our analyst maintains buy rating on the stock with a price target of Rs 170. Federal Bank reported mixed performance in Q1. However, we believe the bank is well poised to sustain ROF 1.2% in near to medium term despite near-term cyclical headwinds. Strong asset quality and lower credit costs are likely to support return ratios, and reversal in return ratios is unlikely. Bank is looking for capital rise via QIP to fund growth. We believe the bank still has lever to surprise positively from year on, led by operating leverage and higher core fee income. Valuation is cheap versus return trajectory expected going forward. The stock currently trades at 1.1 times FY24 estimated adjusted book value and 0.9 times its FY25 earnings adjusted book value estimates. The stock has outperformed the broader indices in the last 12 months. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure document issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.